Hello and welcome to this Forex Preview at XM.com. We'll be taking a look at the upcoming Eurozone inflation data and the potential reaction in the euro. I'm Maria Pachardis, and joining me is Senior Investment Analyst Haralambos Plisouros. So Haralambos, last month the ECB delivered its second straight 75 basis point rate hike, and some investors think another triple hike may be on the way, given the surge in Eurozone inflation in October. On Wednesday, we'll get preliminary inflation data for November. What are we likely to see, and do you think the data might alter ECB policy expectations?
Hello, Maria. Indeed, following the October inflation data, which revealed a strong acceleration into double digits, many market participants were convinced that another 75 basis points hike may be warranted, a view also supported by the minutes of the October meeting, which revealed that euro area policymakers were anxious about inflation becoming entrenched. And that was a discussion held before the inflation data for October was out. Now, the flash estimate of the headline harmonized index of consumer prices is expected to show a slowdown to 10.4% year over year from 10.6%, while the core rate is anticipated to have ticked down to 6.3% from 6.4%. However, with the headline rate still in double digits, the core number well above the ECB's objective, and the headline producer price index at unprecedented levels at above 40%, market participants are unlikely to significantly alter their bets with regards to a 75 basis points hike at the ECB's upcoming gathering. The PPI data for October is coming out on Friday, but even if it points to a second consecutive slowdown, a headline rate near 40% leaves no room for the ECB to let loose on its fight against inflation, as skyrocketing producer prices could be channeled into next month's consumer prices and result in another acceleration. What's more, last week the preliminary S&P global PMIs pointed to another month of contraction in November, but all the indices rose instead of sliding like the forecast suggested. Yes, a recession in the euro area seems inevitable, but the PMIs may have added to hopes that the wounds may not be as deep as were feared a couple of months ago, thereby giving another reason to investors for anticipating another triple hike.
Okay, so what reaction are we likely to see in the euro if there is a slowdown in inflation?
Now, the euro could slide a bit on a potential slowdown, but the retreat may be very limited and short-lived. As I already noted, I don't see market participants backing down from their 75 basis points hike bets in case the slowdown is so small, especially with the PPIs keeping the chance of a rebound in coming months well on the table. So, an ECB expected to act more aggressively than the Fed in December could keep the euro supported against the US dollar for a while longer. The current recovery in euro-dollar could extend above the high of November 15th and perhaps aim for the next resistance zones at 106.15 and 107.70. Nonetheless, the recession in the Eurozone is still estimated to be deeper and more prolonged than in the US, which means that the ECB may not have the comfort to continue acting aggressively for longer and may not go as far as the Fed in terms of a terminal rate level. Now, in other words, the prospect of a full-scale bullish reversal appears premature, and thus the latest recovery in euro-dollar and any extensions of it may be more wisely treated as a strong upside correction, at least for now.
Haralambos, thanks so much, and thanks for joining us at XM.com.